Hi there, I'm Champion Trader Kevin Davey, and today I'm going to test not a single, not a double, but a triple moving average algo. So let's get started. I'm going to test a triple moving average system, and this is kind of ironic because way back when, I remember calculating a triple moving average system by hand on piece of paper using the LA Times or the Orange County Register when I lived in California and getting the prices. And I remember doing it with lean hogs. It was called live hogs at the time. And the only other thing is I remember losing money and then saying, this system doesn't work, I'm going to do the exact opposite. And I started making money. And of course, then hogs hit a trend and I lost again. That's what I remember about a triple moving average. So my history with this guy is not so good. But hey, I'm willing to test anything to give it a second chance and see if it works. Now, some of you might say, well, hey, you test a lot of simple things. If you go back and look at my previous videos, you'll see that. But a lot of times the simple things still work. Doesn't mean they won't have drawdowns, because they usually do, but the simple things work a lot of times. So keep that in mind. You don't need to have a strategy that's written by NASA to work. And I should know, I did an internship at NASA one summer, so I kind of know some of the rocket programs that they were doing there. And probably a lot of them were building algos or systematic trading back then, and they were probably overcomplicating things. It is hard, though, to trade with simple systems. I will say that. Okay, so off my soapbox, let's get going. So this is a triple moving average. It's a standard classic entry. I'm going to put a stop loss with it. The rules are, if the close is greater than the fast moving average and the fast is greater than the medium and the medium is greater than the slow, you go long. Vice versa for short. But part of that is one of these has to go from false to true. So there has to be at least one cross. So what would happen, let's say the close is less than the fast one, the previous bars, and then it crosses above the fast and all the other ones are true, then that would be your go long. So one of them has to cross from the previous bar. You can see that in the Tradestation Code, where, again, if you don't know Tradestation, hopefully you can follow along here, but I'm calculating a fast average, a medium average, and a slow average. And I say, I have a variable price and average is aligned, L and S for long and short. And here's the conditions. This will either be true or false. If close is greater than the fast and the fast is greater than the medium and the medium is greater than the slow, that's true. Otherwise, that variable will be assigned false. And then what I look for here is the current value to be true and the previous value, which is that 1 in the bracket there. If that's false, then I buy, because it means it was false, now it's true. That means something crossed. That's what triggers the triple moving average buy. And the opposite's true for selling short. And again, the stop loss is actually just a closing price stop loss. It'll exit at the open of the next bar if the loss is too big. 3 variables that I'm iterating: the fast length and slow length. The medium length is actually the fast length doubled. And you can see the ranges here along with the stop loss. And I set this up so that they don't overlap. Depending on how you set it up, you might get a fast length, which is actually longer than the slow length. So I tried to do it so you could never have that situation. So the slow length is always the one with the biggest number. Okay. 3 optimized inputs, 60 iterations total. And this is all part of what I do as part of my strategy building process. And These are the steps. This is what's called the strategy factory. You've probably heard that term before. All it is are these steps. And so what I've showed you today is really the trading idea, and then I coded it up. I'm going to show you some of this preliminary testing, which I also call limited feasibility testing. And then I'm going to show you the walk forward testing. Not going to show you Monte Carlo, incubation, diversification, position sizing. Those are all steps you take after the walk forward, but I'm at least going to show you the first couple. I just wanted to give you an idea of what my process is. So it's a pretty in-depth process. I'll tell you, most strategies with most markets and most bar sizes fail. It's hard to pass, but what you're left with is, sort of the cream. The cream rises to the top. And what I'd like to think, some of the strategies I build with this process are the cream of the cream. If that's even a phrase. I think it is. So anyways, here's a sample trade. And you can see the 3 moving averages. If you zoom in, it's hard to see the cross here, but there is a cross of the blue below the purple. So that is what triggered this short trade where the blue was above the purple. Now it's below at the close of this bar. So therefore it says, hey, go short. And that's where it goes short. And you can see right away it went short, and that was a green bar. So you were losing. Then it started to go in your direction. But that just gives you an example of what a trade would look like with those moving averages. So looking at preliminary testing, which is over the last 2 years, I'm looking for robustness here with a proprietary measurement I use. There are 90 that pass markets and bar sizes. Here's a couple walk forward results. The 720-minute FGBL. You might be saying, what in the world is that? That's a European interest rate. A lot of times they act the same as U.S. interest rates, but sometimes they don't. Not the greatest walk forward curve, it's a pretty long extended drawdown, but it has potential. Here's a 60-minute soybean chart. Soybeans I find quite a few times at work. So here's one where it works. And then when you look over the whole 15-year period, again, you'll see a lot of suspects that you've seen in previous videos. For whatever reason, some markets just right now they work with quite a few different strategies. And there's 18 again. So that's the list of what works good. Again, you saw those steps that I follow. So I didn't talk about Monte Carlo simulation really. I didn't talk about incubation. Those are ones steps you still have to do before you get through this and say, hey, this is a good algo to trade. But in general, the idea is pretty sound. You see it works in a lot of different cases. And there's some robustness, so that's nice. Finally, always test for yourself before trading. If you've listened to nothing I've said in any of these videos, hopefully you've at least picked up the fact that Kevin says, always test for yourself. I think that's important. Your money is important to you more than anyone else. So make sure you do the right thing. You do your due diligence. You do the right testing because it's your money. You got to take care of it. Okay, so if you like this video, please leave a comment, give it a thumbs up, subscribe to my channel. I'm Champion Trader Kevin Davey. Thanks for watching.